Hello and welcome to another update video about the DXY. It's about time we cover the DXY again. So let's take a look at it. And the idea is still overall long-term projections still sort of in the low $90 area. I've got, two main scenarios I'm tracking. In one, we are in a larger degree wave 4, which started a while ago. We talked here about September 22. The move down was an A wave. It looks like a 5-wave move down. We are now moving up in this, A, B, C structure, which is a B wave. Depending on where that wave A really topped, it is a larger B wave or could top at any point. At the moment, there is no sign of a top, so focus is on higher in the short term. But yeah, this is likely just a corrective rally before we then go down in a C wave into the low $90 area. The question will be, is this going to be all of it? Is this going to complete a wave 4? Or is it going to be a larger A wave? Then we'll see another B wave and we'll spend some, several years in a range here before we really crash down for a final low before we go into a long-term uptrend. So it could be long-term range boundedness here. But for now, I watch for higher prices in the short term, possibly to the top of the resistance box there around $113, 111 to 113 before we then start a decline. For now, the trend is up. And if we go to the shorter time frame, just don't know where that wave 2 comes from. The idea is that a B wave bottomed, whether in the yellow count or the white count, a B wave bottomed in September, and we're moving up. So the question is just, have we topped? The last decline looks more like a 3-wave move. I'm talking about the decline from the January high. So it's like a 3-wave move down. So overall, higher price is still possible in the very short term. And we could be in a 3rd wave at the moment to the upside. And it's not the cleanest micro count, okay? But in the yellow count, as long as we're holding, and that's important, as long as we're holding above the last key level there at $107.80, the focus would be on higher prices. And I could see the market move higher towards $111 to $113. Any break below that last swing low that I just mentioned, especially if that decline is in 5 waves, would suggest further that the market has really topped. That would need to be confirmed further by a break below that other swing low just below. Here we talk about round about $106.70. But any decline in 5 waves, would give us that signal. Now, this move down looks more like a 3-wave decline. One more low would have been 5, but there's no sign yet of one more low. So at the moment, I think it could, we could get further upside. Now, I've sketched here some microstructures, to be honest. They are not always nicely defined on the DXY, okay? There is a limit. It would surely be preferred if that 3rd wave maybe pushes a little higher, then we get a noticeable wave 4, then a wave 5, off 3, then another wave 4, but it's not always going to be that clear. But I would try to give you always the key levels that need to hold to keep the current trend, which is up, alive, okay? So I think we can still watch for higher prices, but the market, like in the white count, in the white scenario, that move up could be complete. But at the moment, microstructure-wise, it looks a little bit more like the yellow scenario, I would say. Trend is certainly still up, and the bottom line is, as long as we are above that first red line, at $107, $107.70, $107.80, the focus can still be on higher prices. That's the update about the DXY. Please, hit the like button, leave a comment, and subscribe for further updates. Thank you very much. Bye-bye.